Ladies and gentlemen, Greg McCloskey from ForexLive.com. As we head out of the current week and look forward to the new week starting March 18th, the code word for next week is central bankers. We have the Bank of Japan on Monday. We have the Reserve Bank of Australia on Tuesday. We have the U.S. Federal Reserve on Wednesday. We have the Swiss National Bank on Thursday. We have the Bank of England also on Thursday. That's a lot of central bank policy. All except perhaps the Bank of Japan is expected to keep rates unchanged. But of course, the markets are going to be very much interested in what the central banks have to say about future policy going forward, including the Federal Reserve, which will also announce their dot plot and central tendencies report, which is always interesting and adds to the volatility for the trading week. Of course, to prepare for fundamental news like interest rate decisions, it's important to understand the technicals that are driving the currency pairs as well. What levels are key, what the targets, what are the biases, what are the risks, all those things are very important in understanding what the market is telling you. So going ahead, I'll outline those technical levels in play, starting with the euro versus US dollar. So let's get started. Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the euro versus US dollar as we head toward the end of this trading week and look forward to the new trading week. What is the biases? What are the risks? What are the targets? What might we look for that would give us the advantage from a technical perspective in this currency pair? I'm going to go through those in this video, so let's get started. Looking at the price action, the first 3 and more than a half trading days in this week saw the pair move to the downside, then the upside, and then back to the downside. We finally broke to the outside of that range in trading yesterday after the CPI data, the stronger jobs. Initial jobless claims and continuing claims, and it forced the price further to the downside. Now this low area right through here was home to some swing highs through here, and then we broke above it, and then came back down to it, and so breaking below that level, and then finding resistant sellers against it and trading here today increases this level's importance going forward. Also important on the top side, if the buyers are going to come back in, are the 100 and 200 hour moving averages. Both of those are starting to converge, indicative of a market that's turning around, perhaps. We had our highs, and now we're breaking down to the downside. But nevertheless, if the price were to move back above those two moving averages, things would look a little bit more bullish for this pair once again. What keeps the buyers in play, even though the price is below the 100 and 200 hour moving average in the short term, is that the price held support against the 38.2% retracement in trading here today. What I like to see is a trend type move to correct more than 38.2%, and that was not the case so far today and this week. So you can argue that this move to the upside is and this move to the downside is just a normal plain vanilla correction. What is a more of a bullish market that we deserve to then move to the upside through here, and we'll see. And what would tell us that is the case is a move above the 1.0900 level and then above the 100 200 hour moving averages. That would be that scenario. But conversely, if the price can't get above these levels, and we start to move back below the 38.2% retracement, that would turn the picture around and have traders then looking toward the next key targets on the downside, which include the 100-day moving average, 50% retracement of the same move to the upside, and the 200-day moving average. All those levels come in between this area right here, between 1.0837 and 1.0848, and get below those levels would obviously increase the bearish bias to the downside in trading next week. So right now we are in between resistance above at 1.0900 and then the 100 200 hour moving average. We are above the 38.2% retracement, 100 and 200 day moving averages. All those levels will be our target levels, and to determine whether the bulls are winning or the bears are winning, and that's what we have to look forward to next week. My name is Greg McCloskey. Good fortune with your trading. Bye bye now. Hello, ladies and gentlemen, Greg McCloskey with the Forex quick look at the sterling versus US dollar. What is going to drive this currency pair in next week's trading? What key levels will traders be focused on to determine either bullish or bearish bias, and what are the risks and targets for this currency pair? I'm going to outline those in this video, so let's get started. Looking at this currency pair, the price based here and moved to the upside, and in trading on Monday's trade, what do? We came down after moving higher and moved right down to the 50% midpoint of this move to the upside. The inability to get below that 50% retracement gave the buyers a go-ahead to push back to the upside, and we moved back above the 128 level. Remember that level? That's our red, top of the red box. And we stayed traded above and below that level for the next few days of trading until yesterday's trade off the CPI and initial jobless claims. We started to see more selling pressure or increased selling pressure that took the price away from the 128 level, below the rising 200-hour moving average. That's a green line in this chart, and away from the 100-hour moving average up here after trying to move above it earlier in the session. So that tilted the bias more to the downside, and that momentum also fell below the 50% retracement on its way to this low right here near the 1.2729 level. Now that level happened to correspond with different swing highs right here. Traded above and below the area through here, and then based against the level before moving to the upside here. So that was a swing area, sort of a recent one where the price had some consolidation here before moving to the upside, and we held support there. And the trading here today, we held support and held support, and in the last few hours, we saw a break back below that area, which should have sent the price lower, but what got in the way? The 100 bar moving average on the 4-hour chart. And we found support buyers, and now we're currently trading back above the swing area right through here. It's Friday. You can expect that. You saw, profit takers come in against the 100 bar moving average. Doesn't necessarily mean that it's all over for the downside, but certainly it increases the level's importance going forward, and that's what we're going to look forward to next week. If the price can get below this level right here at 127.216, that should open the door for further selling pressure, and then we'll look down toward to and through the 61.8% retracement, like toward the 200 bar moving average on the 4-hour chart, which is kind of going sideways down here at 126.70. So that would be the bear case scenario. What would also keep the sellers more engaged and probably in control is staying below the 50% retracement level at the 1.2746. Obviously, that was the low price that we saw on Monday. We traded above and below it on Thursday and again today. But if we can stay below that level going forward, now that we moved away from it, that gives the sellers more of an advantage, and you can envision the price moving further to the downside in next week's trading. Conversely, if the price were to not be able to get below the 100-hour moving average and start to work back above the 50% retracement level, that would disappoint some sellers looking for the selling to the downside here. We already had a failed break below the low price here. So can we afford to get another failed break below the 50% retracement level? Well, at least in the short term, I would expect that we'd see increased buying on a break back above the 50% retracement level. That may take the price back up toward the 100 and 200-hour moving average, where the market can get and make another decision. Keep this area in mind at 127.80-ish type level as a level that if we're going to go higher, we're going to need to get above that level to push in that upward direction. So there you have it, my look at the sterling versus US dollar as we head into the weekend. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now. Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look at the dollar versus yen as we head toward the new trading week starting March 18th. What are the levels of play? What can we look forward to from a risk and target standpoint? I'll go through those in this video, so let's get started. Starting off by taking a look at the daily chart just to get a vision here. We have seen a sharp move to the downside over the last, since the beginning of March, and the price to the downside has been spurred on by the idea that the Bank of Japan would perhaps look to tighten their policy sooner rather than later, and that sent the yen higher, the dollar lower. But the price low came in ahead of the 200-day moving average, and we started to see some movements to the upside. There were some comments from the likes of Ueda and also Finance Minister Suzuki out of Bank of Japan early this week, or the finance minister out of Japan, that forced the market back to the upside. And in doing so, we got above back above the 100-day moving average, and you can see the momentum has continued. Now, despite the reports today that the Bank of Japan was ready to start to tighten policy, move off their negative interest rate starting next week when they meet, announce their interest rate decision, we're seeing continued momentum to the upside in the dollar versus yen today. So dollar selling. So go figure what that's happening there. Nevertheless, the price is moving away from the 100-day moving average, and that's more positive, and we're retracing this move to the downside as well. So let's take a look at the hourly chart and try to make sense of what the price action that we've seen this week is doing to the technicals that are in play. And if we look at this currency pair and look at the technicals, what kind of sticks out to me is that yes, the market was having trouble at the beginning of the week with ups and downs, down trading, but at the low prices here and here, and maybe even here, the price sort of formed this bottom here, this rounding bottom, if you will, where the price lows weren't able to get below that 100-hour moving average, which is starting to flatten out and start to move back to the upside. So that was a clue for buyers that we got above the 100-day moving average and went up to test the 200-hour moving average here, traded above and below it here before moving to the upside and going up to test the 50% retracement of this move to the downside. We found that willing sellers against that 50% retracement on the first look and saw a rotation back to the downside fairly quickly in trading here today, but the move back below the 38.2 and the 200-hour moving average was not very long, and we started to see a snapback move to the upside, moving up to this swing area through here where we had swing highs through here, turned to swing lows here before moving to the upside, and then came back down to that area and rotated to the downside through here, back to this area here where we tried to hold the ceiling, but then moved above that ceiling, and that opened the door for further upside momentum. So the buyers are definitely making a play. We're above the 50% retracement level, where we had the opportunity to move lower below the moving averages, couldn't do it. We based again. We've moved above this swing area through here at 148, 88, 82 to 88. And the only thing that we haven't done going forward, and what we look forward to in next week's trading, is getting above the 61.8% retracement of this move to the downside. That level comes in at 149.196, and it is our next target to get to and through on the top side if the buyers are to take control. That level happens to also correspond with this swing low right here, where off of the highs right here. We had this ceiling area up through here that eventually gave way, and the first move to the downside stalled right at that level. So, coincidentally or not, the 61.8% retracement and this low right here both come in at the 149.19 level. By the way, it was also a low here. It was a low through here. So not surprising why that level. What did find some support buyers on the initial break to the downside here. So be aware, be prepared. But we do need to get above that level. Close risk for longs is this swing area. But I would probably say the 50% retracement is probably, give it a little bit more room for the longs. If the price were to move below the 50% retracement, all bets are off on the top side. I think there would be some disappointment when we start to work back down toward the 200-hour moving average and this rising 100-hour moving average, which you can imagine is going to be crossing over the 200-hour moving average come Monday's trade. So be aware near the 148.07 level on the downside. If we break below that level, then the 100-day moving average is going to be back in play at 147.689 and get below that level, and it's to the downside here. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now. Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look at the dollar versus Swiss. On today's price action, the dollar versus Swiss moved higher, moved lower, and then back to the upside. The low price today found some support against a key swing area and near a key moving average level. That's going to be in play in the new trading week. Let's talk about the other levels that are going to be in play as well in this video. So let's get started. Looking at the hourly chart of this currency pair, and as you can see, the price action in trading here today was initially to the upside, and then back down, and then back up again. On the way to the downside, what did the price do? The price moved down to and through the green line right here, which represents the 200-day moving average, but it found support buyers right here against the low of a swing area, going back in time to different swing lows right here. Swing high, swing low right here, swing low right here, low, and then a bunch of swing highs through here, which all started it, lows and highs through here, and then all started, I guess, way back here when the price moved above this level and traded traded above that level. So a lot of different arrows here where the price above it was more bullish, the price below it was more bearish. So it becomes a dividing line between the highs going back in time and the lows going back in time, mainly in this box right through here. So be aware of this level, the 200-day moving average, also the swing area down to 0.8818 and 0.8825. That's going to be our key barometer itself in the early trading part of the week. Stay above is more bullish, move below is more bearish. On the downside, if we do move below that area, below that 200-day moving average, we then look toward the moving averages through here. And there are three of them. One is the 100-bar moving average on the 4-hour chart. 2 and 3 are the 100 and 200-hour moving averages, which, as you can see, are converging as we head into the close for the current trading week. So those are going to cross over, of course, but they're still going to be in play. And as long as the price can remain above them, then that would keep the buyers in play. If we move below them, then they're not in play. The sellers are more in control, and then we look down toward the 200-bar moving average on the 4-hour chart, and then start to look toward the 100-day. So that would be the bearish case scenario, but it would all start with getting below the 200-day moving average, getting below the swing area. On the top side, we of course have to get above the high price that we saw in trading this week up here near around the 0.885-ish type area. Get above that level, and it opens the door for further momentum toward the high prices going back in the month of February, which peaked out between 0.8885 and 0.8892 for that currency pair. Of course, the 89 level is also going to be a level of importance for the dollar versus Swiss. So as we head into the weekend, the buyers are more in control above the swing area. Buyers are more in control above the 200-day moving average. That's going to be our key barometer next week. Stay above it, it's more bullish. Move below, it's more bearish. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now. Ladies and gentlemen, Greg Michalowski with the Forex Quick Look. I'm going to take a look at the dollar versus Canada as we head into the new trading week starting March 18th, 2024. Let's talk about it. Focus on the 4-hour chart in this currency pair. If we go back in time, go back in this week, we saw it's in between these vertical lines through here, this dash vertical line. We had lots of up and down price action at the beginning of the week. And Thursday, we started to see more of a move to the upside on that dollar buying. That price that took the price to and through this swing area right through here where the buyers had their shot to go higher. They couldn't do it on the first look, and we started to rotate back to the downside and looked like things were going to break down again, but then we saw a rotation back to the upside in the last few hours of trading, and we're seeing the price get back above this swing area here. That swing area, by the way, comes between 135.26 and 135.42, and is going to be a level area of importance going forward. Not only is it home to a number of different swing highs going back in time, including all these, where we had a ceiling and then became a floor right through here, and then a ceiling again through here, and then a floor through here, and then a ceiling once again here before we got into this week's trading with the up and down over the last day of trading here in this currency pair. But it is also home to the 50% midpoint of a longer term move. I'm going to show you that if I take a greater view here. Look at this move to the downside here. The 50% retracement comes in that area. It's also home to the 100-day moving average, and just below it, the 100-bar moving average on the 4-hour chart is also in play. So there's a lot going on within this area that keeps it as an important level, not only to the buyers but also to the sellers for this currency pair. So be aware and be prepared for that being the key barometer in trading here next week. Move below the 135.27 would be more bearish, sending the price out further to the downside, or likely to the downside, where we then start to look toward the 200-bar moving average on the 4-hour chart, followed by the 200-day moving average. That's this green line right here at 134.80, and get below that level, we'll start to look toward the 38.2% retracement, the broken 38.2 right there on the downside. Now, on the top side, right now, the buyers are more in control above this swing area, or near the top of it, and also above the 50% 100-day moving average. And as long as that story can continue, then the upside has the greater advantage with the high prices that we saw in the month of February, to the end of February being the next key target at 136.049. If we get above that level, then we'd have it would open the door for further upside momentum. Again, broader look at this pair. Getting above this level would then look toward the 136.23 level, which is home to a number of different swing levels going back in time. And you can see the importance of getting above that yellow area right here would be for the dollar versus Canada. So watching this swing area here where we're just above right now. In the new trading week, stay above is more bullish. That's going to be the big key for next week's trading. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now. Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the New Zealand versus U.S. dollar. We're heading into the afternoon session in the New York session. It's Friday. That means we're heading toward a new trading week as well. And that's when I like to take a look at the market from that perspective, what we did this week and what we may do next week. So let's get started. At this time last week, this is a 4-hour chart, by the way. The price was moving to the upside and coming off of its double top right through here, where the price found resistance against the price a couple weeks prior. And we came down into this ahead of the swing area down through here. And in this week's trading, we moved sideways into Tuesday and then broke below that level, the swing area right through here, and rotated back to the upside and up and down trading. It was sloppy trading until yesterday, where the price fell below the 100 bar moving average on the 4-hour chart, also fell below the 50% retracement of this little move to the upside. That level came in at the 0.60418 level. And that sort of opened the door for further selling pressure below those levels. We came down to test the 200 bar moving average on the 4-hour chart. And this blue line is the 100-day moving average. And both of those levels were broken in trading yesterday. And we've seen continued momentum to the downside, to where the current hourly bar is trading to new session lows for the trading week. And also moving toward this green line right here. This green line represents the 200-day moving average. That level comes in at 0.6079, which is close to another swing area here, but also within this yellow area, which is a swing area target defined by a number of different swing highs and swing lows going back in time, including these levels through here, here, and here, and here, and here. So on and so forth. You can see the number of different times that the market came into this area, found support buying. So this was a good floor. We got a little wonky and messy through in here on the break below the level, couldn't sustain momentum. Same here, and then we started to establish support against these levels through here, here, and here before moving to the upside. So we're coming back down to that area after all that long discussion. And we have to get below the 200-day moving average and then get below the low of this swing area to increase the bearish bias on the downside for the New Zealand versus U.S. dollar. So be aware of that as we head into the new trading week, this yellow area becomes between 0.6061 and 0.6085. So about 24 pips wide there. Inclusive within that is the 200-day moving average. Also inclusive within that line and right on the 200-day moving average is this trend line connecting swing lows to swing lows to swing lows here that cuts across right at that 200-day moving average. So be aware of that level. It's kind of like one of those dual levels, like this level right here, like this level right here, like this level right here. So getting stable at that level keeps the bears more in control. Alternatively, you can sit there and try to buy, if you want to buy a dip in the New Zealand versus US dollar, this is where you want to buy it. If the price were to stay above that level, then we could see a rotation back up toward the 100-day moving average, 200 bar moving average. If we break below it, you know where your stop is. Getting below that level, or you can move your the buyers could also use the 0.6061 level as a stop, or below that level as a stop to the downside. So that's my technical look at the New Zealand versus U.S. dollar as we head into the new trading week next week, and also a review of what happened this week and why. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now. Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. It's moving back to the downside and trading here today after rising sharply yesterday. What has that done to the technical picture? I'll go through all that in this video. We saw a sharp rise in the U.S. dollar and the U.S. dollar versus Canada yesterday. That rise to the upside saw the pair move to and through some key technical levels, including the 200-day moving average. That's this line right here. The 200 bar moving average on the 4-hour chart. That's this green line right here. The 100 bar moving average, the 4-hour chart, and the 100-day moving average as well. We're all broken in trading yesterday, and that momentum continued until the price hit the high price of this swing area. Let me get rid of all these arrows here, and I'll show you the importance of that swing area. That swing area comes between the 1.3526 and 1.35428 level, and it is defined by a number of different swing highs starting way back here, where we had all these different swing highs forming a ceiling, move to the downside, move to the downside, come back up to the area, and move to the downside, break through the L level here and move higher, and then try to hold support against this level here until we fell below the level and moved to the downside, came back up to the area, moved to the downside, came back to the area, down, came up to the area, modest move to the downside and moved back above the level here, where we again tried to find support a few weeks ago against the level, tried to keep the price above this level, could not do it and fell below that level, and it wasn't until yesterday and then today where the price actually broke above that level. That break to the upside came up to the underside of this broken trend line and then ran out of steam. And as you can see, the price has since moved back below this swing area, back below the 100-day moving average, and even the 100 bar moving average on the 4-hour chart in early trading. So what now? Well, the buyers had their shot, okay? This is how I see it. The buyers had their shot on the break above this swing area that I so pointed out to everybody with all those different swing highs and swing lows in that area. The price should have gone higher off of that break, but it didn't, and the price rotated to the downside. So now the bias shifts more from buying to selling, hence the move below the 100-day moving average, move below the 100-bar moving average on the 4-hour chart. And I'm going to use these moving averages as our close resistance level. Not only is 100-day moving average important, but it's also at the low of this swing area through here. So that's going to be really the a ceiling level now, that if the sellers can stay below that level, the bias remains to the downside. If it starts to move above that level, we lose some of that negative mojo that we've seen in trading here today. And we could then end up going back and testing the high of the swing area, and we'll see what happens there. So watch the 135.27 level in trading here today. I know we're only 7 pips away from that level currently at the moment. We could head up above that level in the next few minutes of trading. But if it does hold resistance against that level, if you are more inclined to selling the U.S. dollar versus Canada, this is the area that you want to start to pick at and hope that the price stays below that level. If it does, then we'll look toward the other moving averages that we broke earlier this week, including the 200-day moving average, the 200-bar moving average on the 4-hour chart. Conversely, if you are a buyer, you want to see the price start to get back above the 100-day moving average. If it does, there's a good chance that we head up to the high of this level, and we could also extend back to the upside and disprove the seller's claim to this break lower today, just like the buyers were disproved up here. So that's my look at the dollar versus Canada. Yes, we're in a transition. Why? Because we had this failed break today and the buyers were so strong yesterday. But we'll see what happens going forward as the market corrects and the buyers and sellers have a bigger decision to make. Do they stay below the 100-day moving average? That's what I'm going to be looking at for the clues for traders going forward. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.